Today's market call is brought to you by MoneyLion, the first digital ecosystem for consumer finance, empowering everyone to make their best financial decisions. It's 11 a.m. on the East Coast on this August 18th, month passing by just like that. Guy Adami, Dan, Nathan for market call. In just a matter of minutes, the great Carter Braxton Worth will be joining us to break it down.
Break it all down. 18th, guy. I mean, it is just summer. It's gone away, man. Like it just got here. It went away as soon as it got here, that sort of thing. But,
What happens?
I was going to say this, guy, because it's like a t-shirt day, like interesting day in the market, but not. This is like the summer sort of doldrums. I'm looking at the screen. I see the S&P literally down
Punched.
one point. Like this is an index that trades at 64.48. It's down 1 point. The NASDAQ is down 13. That's an index that trades at 20,000 or 21,000 or something like that. So, maybe the main event as we get into the week here, we got the Jackson Hole confab. Is that something you're really interested in or no, one way or another?
Oh, I think it's more so this year than most years. I think just given some of the things swirling around the Federal Reserve, I think makes it interesting in and of itself.
Yeah, I wonder if because of the anticipation of that and because we just had this Fed meeting and a whole host of other things that we don't have a Fed meeting in August, but we had one July 31st, that maybe nothing happens. You know what I mean? Like it just doesn't seem like Fed Chair Powell wants to be bullied into anything or will be bullied into like a change of, tune or anything like that. And, until we get some of these inflation readings, we just had a bunch last week, like really nothing to do anything. And then on the employment front, I mean, in 2 weeks, we're going to get the August, 2.5 weeks or something.
All important.
The all-important jobs report. So I don't know, like earnings, we're going to start getting these retail earnings. We have a few names we want to hit there because there's kind of some interesting price action in the consumer discretionary space. But where do you want to start here, Guy?
Well, it's a big week in retail. So, we've talked about that. We'll bring Carter in a second. But, I don't think there's going to be any change of policy coming out of Jackson Hole. But what I'll tell you is I think some of the inflation data that we've seen over the last week or so has given some credibility, in my opinion, credibility to Jerome Powell's steadfastness, if that's a word, and sort of just remaining status quo. And again, I don't see the urgency to do anything here. I don't think he does either, but it should embolden him a little bit, I would think. And again, I'm not looking for policy change, nor are you. I'm looking for just some of the rhetoric as things get amped up, tamped down, that type of thing. And what is the response, if any, by the White House?
Yeah, I mean, we know there'll be a response, right? And it seems like when we get back in September, the Fed is going to be on the hook for like a shadow sort of Fed chair, like it seems like they want to do that sooner than later, which actually might be really interesting, Guy, to see how the kind of back and forth goes and see just how political that new nomination is going to be. Because maybe, in the meantime, maybe it's something where the person, if it's Kevin Warsh or something like that, really takes kind of a back seat to what's going on. I think a lot of the folks that are in the running for it, if it was a Rick Reeder or something like that, they do believe in the independence of the Fed, you know what I mean? And therefore, maybe it's just a bit of a litmus test. That being said, if Trump were to say, this is my nominee, let's call it mid-September, late September, that doesn't mean that person will be the nominee when it gets to, in front of the Senate, that sort of thing. So, which will be in the spring.
I think, and I don't want to get bogged down in this, nor do you, but I don't think it's going to be a person. I don't think it's going to be a Kevin Warsh. I think it's going to be somebody that's a bit more, and I'm going to use this word by choice, malleable in terms of bending to the whims or whatever of this administration. I think, Kevin was probably in the running during the first administration or, 2016. But I think the president probably found him too strong a personality and somebody he probably wouldn't be able to impress upon as much as maybe Jerome Powell. Now, he wound up being wrong about that too, I guess, in retrospect, but we'll see.
Yeah, one of the things I just say about that, I mean, Warsh was one of those guys right out of Central Casting. You remember, like that was like one of the prerequisites for a lot of those nominees, and I think your port is a good one. Okay, just really quickly, the S&P implying 1.2% in either direction this week. CC had all these estimates in our newsletter. If you're not subscribed to that, go to riskreversal.com and subscribe. That range is 63.70, guy, to 65.30. The NASDAQ 100, 1.5% in either direction. What's interesting, guy, about this, the TLT, right, which is the ETF that tracks the 30-year treasury, right? So the price
20, yeah. But
opposite.
yes.
Oh, is it 20? Okay.
Whatever. I mean, it's all the same thing.
Is opposite that of yields. Look at that 1.3% implied move in either direction. That's interesting, especially when you have a VIX that's 15. You have a move that tracks the, it's like the VIX for the treasury market. You know, that's kind of suppressed. It's just interesting that, and maybe it is because of Jackson Hole that you have that sort of implied
I agree. Move. Let's just throw that up before we bring Card, or bring it up simultaneously. I mean, even if you go longer term, in terms of the TLT, you'll see, although it has bounced a number of different times over the last, year and a half, there's been no meaningful bounce. I mean, we're going back to the summer, the fall of 2023, and you can see it as much as I can see it. I mean, this has been sort of flatlining for quite some time. Some bounces along the way. Now, I look at this and say it just means the market doesn't. What I try to say all the time, the market doesn't give you a long time to sell the top nor buy the bottom. And if that is in fact the case, the fact that we're still here in the mid 80s-ish in the TLT suggests that maybe there's another leg lower, which means yields are going higher. That's just from a technical lens.
Yeah, but
technical lens.
When we use that term technical, we're very fortunate to have a guy who is on the Mount Rushmore
yes, we are.
Technicians. Let's bring him in. Carter Braxton Worth. There he is. Carter, good morning.
Man, happy weekend. Happy Monday. All good.
Yeah. So we have a little, you had some great charts on Worth Charting. You go get those charts at worthcharting.com. Check it out. It's one of our first reads every morning. Great subscription product there. Carter, one of the things we wanted to do is you were charting like Google. You had a great note out on Tesla. I know we talked a little bit about Tesla last week, but the Google's interesting to me. I know you're going to look at Meta. Those two names have been big, market leaders over the last few months or so, and prior to that, obviously Google was a little bit of a laggard, but then there's something else going on, at least today, and this is some of these beaten up names getting off the mat: Lulu, Target, Tech Data, Novo Nordisk, Adobe, and we'll run through those in a second. So those are the names that I think are interesting juxtaposition versus some of the names that you're looking at. Do you want to take a look? What's the first one in the mega cap tech you think really stuck out to you when you were doing your work over the weekend?
Well, I mean, if you look at where stocks are in relation to two reference points, their plunge low of April, obviously most stocks are well up from that level, and where they are in relation to the peak before the plunge started, the February high, we have a very split market. You have things that are well above the level from which they peak sold off. So that's Avago, right? That's Palantir, that's NVIDIA. That's Microsoft. Then you have ones that have yet to make it back to the high, but are right there. That is, of course, Amazon, and that is Google. Meta's slightly above its prior high. Apple has not. It's a mixed bag. But for all of those that are not quite there, Google seemed the most interesting to me. It's right back to its former high, and I think it's a catch-up trade and just a simple conventional buy, meaning a breakout candidate. But if you look at the three slides that are coming up here, the first is juxtapose Google's performance on the way down. And I've chosen things that are relevant: the market, the S&P, the NASDAQ 100, of which it's a part, the S&P 500 technology sector, of which it was a big part until they pushed it into the communications sector, because the people over at Standard & Poor's had a problem because the telecommunications sector was getting so small, which is AT&T and Verizon, it was going to slip below the surface and be gone. So they shoved a few things in there like Meta and Google, and they have now sectors of a decent size. So Google bringing up the rear, which is it was the worst on the way down as seen in column number 3. If you then look at the second part of the sequence, the ricochet, it is one could say, well, it's the best, or at least almost as good as the S&P technology. But I put in line there on the narrative because at 45% plus minus, it's not much more than the NASDAQ 100. It's not much more than the telecommunications sector at 42, 43. So it has a worse than all sell-off, an inline ricochet or recovery, and then the final, of course, of the three, where we are now in relation to the level from which the sell-off began. And that is either the problem or the opportunity. Google is not above its prior high. And so the simple 4-chart report to clients this morning, and here they are, in fact, we have the chart. The second iteration is that we are now back to the penny, yes, to that level. Intraday high on Friday was literally the same as the February 4th high. The circles make that case. And then the next and final chart is a judgment, right? A green arrow. Some would say, well, I agree with everything except that's a double top. You've got a red arrow. You've got your colors wrong and the direction wrong. Hey, that's what makes a market. And that is, but what it means is it is a critical juncture. And it takes a lot of buying pressure to cause a stock to break out, just as it is often the case they don't and they falter. So good technique is, one could say, not to buy it here or to short it, but to watch it and then go with it. It starts to break out, play the breakout. And that's not infallible either. You can get false breakouts, or you get a bull trap and then it craps out, or to say, I'll short it here in anticipation of the double top and then it goes higher, or I won't do anything. And then it starts to sell off now, this week, next week, the double top's in, you get short down 4%, and then it rallies and recovers. Not an easy game. Everyone knows this. If you want easy, you get to annuities. They're quite reliable.
So real
the
quick,
point is,
sorry, go ahead.
I'm a buyer.
I was going to say real quick, and I'm sorry to cut you off, Carter. What I was going to say was, in the earnings, we had pointed out at the time what appeared to be a bit of a head and shoulders pattern. And that's when Google was trading about 193. They reported earnings. Earnings didn't do much to change that. Obviously, we subsequently have gotten off the mat here. My question to you is, how long before, I guess, I just said the market doesn't give you a long time to buy the lows or sell the highs. So I guess my question to you is, how long do you give Google here? Like, how imperative is it, over the next however many trading days for it to close above? I think that's 207.05 level that we closed in February, or traded up to in February.
Yeah, there's no time. A time stop, if you will, is more when you've come down to the 150-day moving average. You're playing for a bounce, to the penny. You've got to bounce, and there's a reason for that, because if something's in an uptrend, let's just talk about that conceptually for 30 seconds, and it's sold off so much and to such an extent that it's all the way down to its 150-day moving average, it's down somewhere between 10, 12% for a low beta stock up to 30. If after being down 10, 12 to 30%, no buyers step in, it means that the for sale sign, the stock's offered for sale, is not enough of a discount. You can contend with a former high for quite some time, right? And just back and fill here. So there is nothing wrong with it not breaking out in the next 5 sessions or 10 or 20, meaning, in fact, that'd be normal consolidation. After all, the thing has just moved up 45%, right? Off of its 3-month move, entitled to back and fill and rest. So there's no time issue here. And again, I wanted to make that clear. Breaking out is no guarantee, right? Good technique argues for going with it. It's just following the ball. If you're a linebacker, it's going left, we go left. It's going right, we go right. But you get false breakouts, and they're horrible. You also could say, wow, it's breaking down 4% with a drop in gap. Let's short it. And all of a sudden it recovers. And then you get short down 4% and the thing recovers. That is why it's called predicting the future. But you have to make a judgment, or you don't have to play. My judgment is that this stock, based on all things discussed, based on the fact that over the past 3 months, guess what? It's done compared to those. On the past 3 months, it's beating the S&P 500. It's beating the communication sector. It's beating the tech sector. It's beating Apple and so forth. So I think you do get the breakout, but I think there's nothing wrong with if and as it backs and fills here for quite some time.
Yeah, and this is where, some of the things that Guy and I look at come into play here. The first and foremost is that, again, we know we've been talking about regulatory action with a lot of these big names, it seems like, for 10 years or so. And really, for the most part, none of the remedies that we've heard or seen from the DOJ or the FTC over that time period have really been market moving for these individual names. Now, there's an expectation that DOJ is going to come out with their remedies from the suit versus Google. And there are some potentially big moves forcing them to sell Chrome, or, not, making them not the front runner or the exclusive search provider on Apple, on Safari, on their browser. So, let's put those things aside. Let's just look at really what expectations are in the market, or at least from an analyst consensus here, expected to have 6% earnings growth this year, 8% next, which is far below a lot of its mega cap peers. One of the reasons why is this assault on Google search from these chat GPTs and the like here. So we get all that. That might be in the stock right here, 20.5 times this year, 19 times next. Now, what's interesting about this, revenue growth expected to be 14% this year, 12% next. Why that differential in growth rates between earnings and sales probably has to do with all the money that they're spending right now on this build out of AI infrastructure. So that's something to keep an eye on. And to me, if they were to dial that back, but then start to get some of the return, if they're able to kind of show a reacceleration in their Google Cloud business, but also uptake of their model, Gemini and the like, that would be kind of interesting to me. I don't play breakouts like this. I'm much more inclined to lean into a double top. And to Carter's point, that's what makes a market. But maybe in my head, a little too much of that fundamental stuff as I look at a chart like that. Guy, does that make some sense to you?
Well, that's exactly right. And that's why 100 people can look at the same chart and come up with, anywhere from 50 to 75 different trading ideas based on it. And beauty, as Doug Cass just said, is in the eye of the beholder sometimes. Some people will look at this and say, this is a textbook about to break out. Other people say, you know what, I'm playing for the double top. But that's why you have such movement and such commentary around these potential formations and stuff. So yeah, absolutely. I will tell you, I look at it and sort of see what Dan's seeing. It's going to be incumbent upon the Google bull. They've acquitted themselves since earnings, but now it's imperative, in my opinion, to sort of close above that 207 level. We'll see how it sort of plays out.
Yeah. And then Carter, the meta chart is pretty interesting. This is one that has been like a universal, the whole street, whether it's analysts, investors, everybody is behind this sort of one. And that gap, I'm sure you're going to focus on a little bit, and the consolidation above it. That's really interesting to me, because it's done the thing that you think Google could do in the not so distant future.
Right. I mean, it's one of two things, right? You can't just sit there. You can sit there a while, but you can't sit there forever. And so, how long before a stock exceeds a prior high? In this case, it gapped up. And we know gaps, it's news, it has to be earnings or something like that. And now it's one day, not a whole lot, but it's down today. So the reference points, and you'll see it in the next chart, the reference points are, if and as it were to check back to the level from which it broke out. Now, is that, again, a plywood board or a concrete floor? Absolutely not. What if it's going to fill in the gap? Would still be an intact chart. So this is why there are nuances. And so there you have key reference points. And I would say here, incrementally lower, one can nibble. Let's say you had never bought Meta. Imagine that. You've been your entire life and watched Meta go from nothing to change its name. What did it used to be called? Something else before. And now you still never owned it. And say, when should you take your first share or add to an existing share? Have two. The point is, on any incremental dipping, a good technique would say you nibble. Now, if and as it sinks into support, or to go all the way down to that intermediate uptrend line, perhaps even fill the gap, I would be more aggressive on the long side, buying more.
We spend a lot of time on Tesla. You have some charts, and we talked about it last week with you. But as I have pointed out, and as your charts indicate, the ranges have gotten smaller and smaller, which makes sense as this pennant funnel continues to narrow from the upper left, lower right, lower left, upper right. You see what's happening here. Walk us through.
Yeah, so we did a poll for clients, and we sent out 5 charts, and you can see them here. They're all the same. We've just changed the verbiage, right? So pair of twos, jump ball, what have you. And then the poll, and there was a box to click off. So just to give you a little perspective, the respondents are individuals who would be worth charting subscribers. These could be ophthalmologists and librarians. They could be people who own 10 car dealerships, lawyers, doctors. They're also, of course, the institutional respondents. So an individual portfolio manager who just does consumer, who decided to respond, or a TMT, small cap hedge fund manager who doesn't look at Tesla at all, but decided to respond to people in the media, from print to television, but all over the world, London to Dubai, from South America to Canada to Toronto. And I can just tell you now how it's coming out, in hundreds of replies, not quite 1,000 yet, but we're almost there. It's pretty much 60-40 red arrow.
Interesting. Yeah. And obviously that probably has something to do with the sentiment too. It was really interesting report you had last week. And I love the fact that we're following it up a little bit with your survey there. I just want to go back really quickly to Meta, because believe it or not, I don't really have a strong opinion in Tesla right here. The thing about Meta, and it's not too different than Google, Guy, expectations for earnings growth are expected to decelerate a great deal to mid-single digits. We have not seen mid-single digit earnings growth in Meta in a very long time. Take out 2022, where you saw, a negative earnings growth, but that is that was for all of these sorts of stocks. And then on a revenue, we're talking high to mid-teens expectations. This is a company that has 81% gross margins. So what's going on here is that all of that spend again is weighing on EPS growth. And I think we know that. And I think the market, or at least investors, are giving them a pass because they believe that they're going to get a big return out of all that spend. All that being said, I look what Carter's saying here in a gap fill, even back. I'd actually rather it go all the way back towards that uptrend that's been in place, because I think you're going to shake out a lot of folks that were playing the breakout, that sort of thing. So to me, I think the Meta is probably the most interesting chart, in my opinion, in the Mag 7 altogether.
All right, this goes to a comment from Wavy McFly. I don't know if Jacob can pull this up, but this is a perfect little bit of a segue. And I'm going to read here, but I'm assuming, again, but UBS, McKinsey, MIT in the last week have pretty much said that AI has zero effect on corporate bottom lines. The narrative is unraveling. Am I too early to go short responsibly? Okay, so I find this interesting. And I'll take Wavy's word for it. I haven't seen any of these reports. What I will say, and what I've said, there are two companies that seemingly, Dan, have levered AI, and that's Walmart and Facebook in terms of what it's done for their margins. Now, I can't speak to the other 5,000 companies out there, but I know those two specifically. But if this is in fact true, that puts a little bit of a question mark around this entire AI trade. We're obviously going to learn a lot more, I think, next week when NVIDIA reports.
Yeah, and there's a lot of folks who, me included, who've been just calling for a digestion phase. We do see CapEx continue to ramp higher. We continue to see a lot of these CEOs unapologetically say they're going to continue to spend, maybe at less of a rate that they have, at least from a growth rate perspective, but on an absolute basis, the numbers keep going higher. So it almost feels like, unfortunately, if you are in that camp, at least from an investment standpoint, the way that you view the stocks that are a huge driver of the stock market, it almost feels like that at best is a Q4 thing, maybe early 2026. Hey, Carter, really quickly before we get out of here, or
just while we're talking, did you see that thing about Elliott Management having all those shorts out on this stuff?
No, I didn't. We're gonna.
Here, I'll just read it. Someone said this to me. Activist hedge fund manager Elliott Management, Paul Singer, of course, revealed several new investments. This is out on Friday. Spiders. She's got puts options. NVIDIA put options. VanEck Semiconductor put options. iShares, iBox, puts all out. So now again, he's look. We all wake up, put our pants on off the side of the bed, their shoes. So no one's got all the answers, but he's a very successful investor.
Yeah, and oftentimes it's funny. You can make the argument that the smartest guys can be early, but when you're actually picking a point in time with puts, you know what I mean, and price levels, you got to really kind of nail it. So interesting. Okay, last bit, we talked about some of the strongest names in the market just now, ex Tesla, and this kind of struck me. And Guy and I were kind of looking around the markets this morning. Let's pull up Lulu, and we can do this kind of quickly on 1 year basis, because you'll just see some very similar sort of price action, a gap to new 52-week lows, right? So that was not really a gap, but you saw a breakdown, and now you see it kind of, crusting a little bit there. Let's pull up Tech Data. This is another one I thought was really interesting to me, TTD. And we could take those lines off a little. Yeah, that's the trade desk. And, over the weekend, there was news that wasn't particularly great, which, again, I thought was interesting. Maybe that's interesting. Maybe it's not. It really feels like that's in no man's land. But I was just highlighting the fact that you had that gap, and maybe it was trying to kind of, I don't know. It was up 4.5% when I picked it up. Novo, NVO is kind of interesting. We know what's going on in this space. And someone just asked about Lilly. So let's just kind of throw the Lilly in. We know that Novo's acted far worse than that of Novo. But again, you see that gap to new 52-week lows. And then we'll do the software ones after. Anything interesting to you about a gap, huge volume, new 52-week lows, trying to fill in the gap?
Yeah, I mean, those are short-term trades, and they have a lot of viability and a lot of efficacy, and but it doesn't change the circumstance at hand. Lilly is a broken chart, and I think it's probably a broken story for now, right? I mean, it's got issues, and Novo as well. But there's nothing wrong with trying to have short-term speculative money-making endeavors in the market.
I think that's right. And that was a question from Toby, by the way, in terms of Eli Lilly. I'm with you. I think the company is fine. I think the valuation is a problem. And I think now valuation is coming under sort of the microscope, which is why if you look, Eli Lilly has not traded particularly well since, I don't know, August of last year. It was basically this time last year when it made its all-time high north of 970. And since then, Dan, it's been a series of lower highs and lower lows off a broader market that's done extraordinarily well.
Yeah. And you used the word, Carter, that, I like to use. I think I said it on Fast Money the other day. I mean, when you're thinking about these GLP-1s, I mean, the stories are broken. Forget about the charts. The stories are broken. The narratives are broken. There was a 2-horse race, and these stocks, if you overlaid Novo and Eli Lilly in 23 and 24, I mean, they looked pretty similar, right? And they were kind of the only way to play this mega trend. So, Novo topped before, and it's gone down a lot more on a percentage basis from its highs. But Lilly right there is in no man's land. So again, interesting. All right, very last one. We promise. Doug Cass writes, I think the Palantir chart is the most interesting, is the leader in the speculative arena, and speculation has gone amok, maybe a top in this bellwether. So you had that earnings gap to new highs, kept on going for a few days. It looks like now it's trying to fill in that gap. Any thoughts here, Carter?
Yeah, I mean, obviously, this Roblox and a couple others are just epically loved, and so the question is how to identify, if at all possible, the prospects of a blow-off top, and or prospectively then the beginning of something worse, which is how they roll over and stall. There's nothing to suggest that there's anything different here. The stock gaps up and pulls back, and gaps up and pulls back. So what would be normative and at a minimum would be to fill in the gap. Does that in any way indicate the highs are in? No. I think just the totality of it, if one gets into the basic metrics of when you pay, 20, 30, 40 times sales, and God knows what this one is, but
100.
History shows that right. Well, you're gonna tell me some number that's even crazier, right? So, yeah, exactly. They work until they don't, and there's no such thing. I mean, it's a good way to end, at least for my part. There's no such thing as a growth stock. There's only a stock in a growth phase. When you're IBM and the Watsons, you look at some of the growth, quarter-over-quarter growth of Polaroid. I mean, think about Xerox. You've got a monk, and what do you? Well, he's got a quill pen. He copies what I write down. I got a Xerox machine. You got a horse. I got a train. I mean, you got a train, I got a plane. I mean, there's always innovation. I mean, Alcoa, think about it. They invent aluminum. It's lightweight, doesn't rust. So all the cowboys have the rusty coffee pots. That was the first use of it. And they have aluminum coffee pots. And then it becomes part of airplanes and cars. The growth rate in some of these companies, Polaroid, Xerox, Alcoa, IBM, I mean, it's even more excessive than these companies on a quarter-over-quarter basis. At the time, they're gone. Westinghouse, it doesn't matter. You can grow until you don't. And there's no such thing as a growth stock, only a company in growth phase. For now, Palantir is in a big growth phase. Nothing lasts forever.
Good way to end it. Thank you, Carter Braxton Worth. As always, throw up the Carter slide because I just like looking at his hair and the little logo. Old-fashioned technical analysis, nothing slick, just charts. Well, his hair is slick there, Dan. So again, thank you to the great Carter Braxton Worth.
Thanks, CB Dubs. Go check out
Bye, guys.
worthcharting.com. Great stuff, guy. You love
I love Carter.
the portfolio that you started when you were in school back in the day? It was
It
riddled
was Westinghouse Air Brakes. Yeah. Wab Tech.
Sears,
we
Sears,
the old locomotives and those types of
I
things.
think you owned Sears before Mr. Sears and Mr. Roebuck.
We went to school with both Sears and Roebuck. Yeah. Good,
All right.
Great guys, by the way.
Great guys. I just think that like some of those names that are trying to kind of fill in those gaps, that gap to new 52-week lows could be interesting. Target we've talked about today is up a few percent. Again, there's expectations of a new CEO, and who knows, you always wonder, right? We had that situation with Starbucks, new CEO comes in, turnaround guy, stock gaps up massively. But again, this is maybe interesting, maybe not. Maybe it gets through its 200-day moving average to the upside for the first time in over a year. Who knows? But you've said this on many occasions. Management has sucked, execution has sucked, and maybe they just have the wrong business model in an environment like this. All right, let's do this one, guy. We've been spending a little time on this theme, and this could present, I think, a really interesting opportunity within tech. And it's not, in my opinion, dumpster diving, but the idea that all of these enterprise software companies, all of these SaaS companies, they were the darlings, in tech before generative AI for the most part. Look at a Salesforce, okay? And Adobe we'll hit in a second. These companies don't report until early next month. But, you see what I see here. And if the sentiment is just so bad in something like this, it really wouldn't take a whole heck of a lot to get to that downward sloping 200-day moving average. Thoughts?
I agree with that. And we talked about it last week. And you can draw the horizontal line across the bottoms from April of this year until where we just traded down to. So, there's your support level, as clear as day. You can go back longer if you want, but that's it. So risk reward, I think that's exactly what you're looking for. And you can see what I'm looking at. That's been a level for quite some time. So if you trade, you say, against 235-ish, I think that's the level. I'm looking for a move to sort of 292, 290, which is effectively, I think, the 200-day moving average. That's not a bad trade. And I think, I'm not saying you're going to get it, but I think the risk reward is about as good as it's been in a while for Salesforce.
Yeah, just technically, and you highlighted, what Google had the potential for a Head and Shoulders. A great example. Some of these patterns fake you out, and I think your point is a great one. That kind of 235 level, that's the neckline. It's also that gap from mid last year, right? That earnings gap. You stop yourself there. The problem that you have with a stop, if you're playing in and around earnings, is that you get a gap, and you know what I mean? Good luck with your stop, which is one of the reasons why sometimes we think about selling a put spread if you want to be bullish, and vice versa if you want to be bearish, because you're basically have stopped yourself out in defined risk, that sort of thing. So again, now let's pull up Adobe for a second, because this one is really interesting to me. One of the hottest IPOs, of the last year or so, was this Figma, right? And Adobe was trying to buy Figma. This is going back, a year and change. The regulators wouldn't let it happen here. This is a collaborative platform for designers and a whole host of other different industries. But, they're really the effect of their ability, Adobe, not to buy this company. And let's go to a 5-year for a second, and then we'll go back to this one, is really kind of just been not good, as you can tell, for the narrative here. But you're getting to a point from a technical perspective that is getting, harder and harder to kind of justify, as it just keeps getting pummeled, because it's trading at a valuation that is almost suggesting that this company is kind of lights out relative, let's say, to the rest of the NASDAQ.
I agree with that. Similar chart to Salesforce. If you look at those lows that we just traded down to, different sort of story, different type of valuation. In the game of would you rather, I think I'd rather Salesforce here on the long side. I think there's more potential for a gap lower in Adobe. Obviously, I know nothing, but we've seen it before. But I think it's right that we bring them both up because, again, very, very similar paths, different valuations, different risk reward. I'd take Salesforce here if you're forcing me to choose between the two.
Yeah, really quickly though, 12% expected EPS growth this year and next, with double-digit expected revenue growth of 10% for the next 2 years. Is trading at 17 times this year, 15 and a half times next. Again, valuation, not a great timing tool. Gross margins, guy. This is one of the highest gross margins in mega cap tech. This is nearly 90%. So it wouldn't take much for these guys to be able to kind of leverage some of the investments that they made. And every time their CEO, opens his mouth, they're talking about what they're doing with generative AI. So to me, I think Adobe is almost more interesting than Salesforce, because to me, Salesforce is a big roll up. You know what I mean? Every time that company needs to figure out how to get the street interested in a growth story, it's not organic. You know what I mean? It's what they can bolt on. And so to me, those sorts of strategies, that's the sort of thing that kept Oracle, the O in your hope trade, in the penalty box for many, many years. It was just a big roll up. Cisco, you could say some of the same stuff. So that's why I kind of favor Adobe, but I get what you're saying as far as another disappointing quarter, another big gap. It gets you through that 2023 low, I think.
We have Matt Walter saying, will Bitcoin bounce? Now, I understand what he is saying, because Bitcoin, obviously, I think traded up to 123,000-ish, and it's currently trading about 115 and change. Now, I look at that and say, not a lot's happening yet. Other people say, my God, what's going on in Bitcoin? And I think that's some of the apprehension around this. When you see a little bit of a move to the downside, which is not a big move in terms of percentage-wise. We've seen it before. I think obviously embedded in that question is this concern that we're going to see another downdraft in Bitcoin like we've seen before. I don't have a view, Matt, I will tell you, but I think the fact that we're marginally off the highs over a short period of time obviously has some Bitcoin enthusiasts a little concerned.
Yeah, really, really quickly, my take on this one, guy, and it has nothing to do with anything, the way people think of fundamentals and the like here. Draw an uptrend from the April low, connect it to the June low, connect it to the August low, which is obviously just a couple weeks ago. This is the very first break of that trend. And you could say, well, it's just an intermediate uptrend or whatever. But if you look at that, you see what I see, guy. It's a
broken
little bit
trend. Yeah.
Oh, no, I thought you were going to say a hungry alligator, but whatever.
Oh, it's a hungry alligator too.
Clearly. But again, like to Carter's point, if you had a check back to 110,000, that might be exactly the level where you kind of want to reload a little bit. So I don't have a strong view about Bitcoin. One thing I will tell you though, guy, is I know this seems way too early, but as we get closer to the midterms in 2026, it'll be really interesting to see if Bitcoin is somewhat of a proxy, the way people look at the betting markets, because so much, in my opinion, of Bitcoin's rally over the last year or so has had to do about regulation and, a lot of the folks in the government, how they feel about it. There's a crypto czar, that works with, I don't know if it's in the White House or whatever. So that'll be really interesting. I know it's way too early, but it'll be interesting to see as the polls start moving around what happens to the Bitcoin.
We got a question about Palo Alto. They report, I think people, if you watch Fast Money or watch this show, you know my views on PANW for quite some time. I mean, this in the sort of cybersecurity space, this is sort of the gold standard in my opinion, and they're rewarded for it in terms of the valuation they get. It's probably $35 or so off this all-time high that we saw. I want to say recently. I don't know if it was in the spring or it was basically around, let's just call it 210. So we've been there a couple times this year. I still like it. It's a tough one though, because you had some dicey moves both to the upside and the downside here. I think you have to have sort of more of a 5-year window on this and say, this is where the world is headed. To try to trade it in and out of earnings has been very difficult.
Well, this earnings is going to be really focused, I think, to some degree on what the company has to say about this proposed CyberArk acquisition and this company where they didn't have a lot of overlap in the identity space. And, this is the sort of stuff that a company like this should definitely be looking to do. Because you want to kind of expand your product offerings horizontally. Let's just go to a 5-year chart, because here's a great example of a stock that it didn't close at a new all-time high. Let's go back to a 1 year, right? It looked like it wanted to break out of a 1 year sort of consolidation. And right when you thought that was going to happen, the company, like it makes this acquisition. I think it was like a $20 billion acquisition or something like that. So again, this one will be interesting to see if they are making that proposed acquisition from a point of strength or a point of weakness. And that'll be really fun. Like I wouldn't be playing this into the print because there's so much unknowns. Last one, guy, Home Depot before the opening tomorrow. So this is one of the biggest retailers, especially biggest one that reports in this sort of phase. So thoughts, because it had this range or this rally, it broke out above its 200-day, and it's right back at that breakdown level, I guess.
Yeah. Look, I mean, everybody, if you look at Home Depot over the last, let's just call it, I don't know, 5 to 8 years. I mean, it's pretty good looking chart, right? But you've also seen some pretty dramatic moves to the downside along the way. My instincts suggest they'll say enough to get the stock back on its horse and potentially back to the levels that we saw. I don't know, was it late last year or so? I think it was the fall of last year. But valuation not stretched historically, but I think stretched a little bit. My instinct suggests you stay long into the print, you let it report, and then look to potentially sell it right around those prior highs. That's just me. So we'll see.
Yeah, I'm not loving this one. If I just look at the price action that we've seen with the home builders, and there is a correlation there. Just the housing market seems really challenged. I know values seem pretty good, but there's just not a lot of movement. There's not a lot of new building, and from a technical perspective, I look at that and I say, guy, that's a formation of a Head and Shoulders, and that little move over the last couple months or so looks like a right shoulder there. But that's just one input. You mentioned valuation. We're just talking about some of the broader trends. If we see unemployment start to pick up, you probably see less folks doing, some of the activity they would in and around their homes and the like. So, and just construction too. I mean, like the dependency there. So, okay, we'll see how the Palo Alto and how the Home Depot trade.
The show goes by so quick, 42 minutes, like that. But again, the great Carter Braxton Worth joined us. We'll have Elizabeth Thomas, no longer young Thomas, ET. She'll join us this week for market. We got a lot going on, Dan.
Yeah, we do. Risk Reversal podcast. We had a conversation with Gene Munster. That's in the feed this morning. He and I hit some of the big names, and I really enjoyed that conversation. Gene's been a great contributor to our pod. You have Liz Young Thomas dropping tomorrow. I have Peter Bookvar dropping on Wednesday morning.
Or vice versa.
Oh, do we? Okay.
Yeah, that's okay.
I know. Well, yeah, you and Peter today drops tomorrow morning. Liz Thomas and me drops Wednesday. Like an iron trap. Isn't that what you say about?
I don't know. I mean,
you do say that. You do. You've been saying that on Fast Money for like 17 years or 18 years. And if we get to January, it'll be how many?
19. Big if. But now that it's August, the likelihood seems, but you never know.
I've been listening to you say that very line. I think since, remember we did the Fast Money 10, we had the X, and I still think they use that. We have those tricked out jackets that they gave.
No, I'm respectful of the fact that every day is a gift, and at any time they could pull the ripcord. Not for us, just for anything in life. So don't take anything for granted.
Okay, thanks everyone for being here.